happy. Right now as well, your declines are overshadowing your advances, but by a bit. So the broad market breadth is not entirely positive. I'll pull up the heat map as well on the Nifty to give you a sense of what is happening. But like I said, the action on the financials, and look at that, the entire top row, the first 5 counters, all in the BFSI space. HDFC Bank, a whopper today. So if you're seeing the Nifty in the green, despite so much of red over here, it's because of heavyweights like HDFC Bank, Axis Bank 3.5% up, ICICI Bank, IndusInd Bank, Kotak Mahindra Bank. I'll be very curious to see the FII numbers which come out today, despite all of those block deals as well. SBI in that list as well. So it's banks and it's IT. Look at Infosys, HCL Tech, all of them doing fairly well. On the losing side, you have some of the consumption sort of plays. Titan also, remember, Citi note out today, not too excited about Titan. They've put it on a watch because they think gold prices are going to be a bit of a pain point. Plus, the wedding season is not on right now, so Titan may be reacting to that. Maruti is having a second tough day in a row. Is it Hyundai IPO effect? One could argue, but not too great on Maruti. In fact, auto stocks overall are seeing a bit of a pain. Hero Moto is one of them as well. Bharti today, 1.5%, nearly 2% down. Remember, Bharti also in focus because of the Vodafone and Indus Tower deal, and Hersh will speak about that in a little more detail in just a bit. But I want to come back to the Bank Nifty just for a second before I bring you in, Hersh, and also the components of the Bank Nifty, because, what a story over there. What a story over there. Let's just pull up the components of the Bank Nifty and what's happening there. HDFC Bank, of course, right on top. Just mildly in the red, BOB, but I think it will cross over soon enough. And I'll just go back to the Bernstein note we talked about in the morning today. So bullish on financials and especially private banks, saying now their time has come.
Yes, in fact, it was a very bullish note. It spoke about a lot of things and likely very bullish across the board. So we read that they're bullish on private sector banks, yes. Yeah. But even the alternatives, even the NBFC basket, even some of the alternative lenders, they're very, very bullish on because of the grassroots level lending that's happening. And that they believe has been a great story over the last 5 to 10 years. Yeah,
but even in the broader markets today, we're seeing a better sort of move as compared perhaps to the top line. The mid-cap now in the red.
Yes, so it's surprising because it's a tale of two very different counters, but essentially the sense seems to be that had the Nifty Bank not possibly participated, you wouldn't be seeing that kind of a reaction even on the benchmark. So essentially it's driven by the Bank Nifty. But let's quickly take it to specific counters and let's chat about some counters. Of course, let me first start off with deals. There were a ton of them. First off, let's keep pulling stocks up. We've given an entire list. FIEB, KNR, Construction, ZF Communications, all of those are buzzing again on the back of certain deals. ABB also down roughly 3.5% odd. As we speak, flashes at the bottom of your screen. Promoter Wabco Asia has sold 7.5% stake to institutional investors. ZF Commercial in focus on the back of that, 4.5% lower on the stock as well. Then in terms of the entire telecom basket, Vodafone, Indus Towers, Airtel, let's pull those up because Indus Towers obviously at stake, Vodafone selling, Bharti Airtel buying 2%, and that's the kind of stock reaction you're seeing across the board. Other deals which are happening, Spandana promoter sales. So Spandana, Sansera, DCX. Spandana, not much of a reaction. Promoter sale to Goldman Sachs. That continues to happen. But while we are at it, there are plenty of others as well. IdeaForge, Quick Heal, Tech are some of the other ones. Then there's the entire fertilizer basket. GST in focus, a positive bullish Nuvama note also coming through. And you are seeing Chambal, National Fertilizer and the like really flying away in trade today. So a couple of those also in focus. Let's pull those up. Again, on the back of notes, Kalyan Jewellers, and there's a very interesting pair trade which is playing out. Kalyan Jewellers was up, in fact, for a good part of the morning at least. So It's flying away in trade. Was our stock of the day this morning. But outside of that, TCS Infosys pair trade initiated by Citi. And that also seems to be playing out at least today in trade. So a very interesting piece playing out there. I also want to highlight some of the other names. SCPC on the back of fundraise. That one is flying away, I think 5% higher the last I checked. Craftsman Automation also on fundraise, flying away in trade. Sugar stocks, EID Parry, Sri Renuka, Balrampur and the like, all of which are up and away.
All right, thank you for that, Hersh. Of course, very detailed point there, and sugar stocks also in flavor. Brijesh Singh, Senior Technical Analyst at Opulent Investment Advisor, now joins us on the show. Brijesh, great to have you on NDTV Profit India Market Close. Let's start with your take on Nifty and Bank Nifty. Actually, I'm going to start with Bank Nifty because that's the story of the day.
So, good afternoon, Tamanna. See, overall trend looked positive for the Bank Nifty has been considered, and it was been little bit lagging when the Nifty was been trading, and it was been in a consolidation zone. The best part was that after the 4th of June, what we have found out, the consolidation of for Nifty as well as for the Bank Nifty, both were in the trading near the resistance. So consolidation was near the resistance, not near the support. So that was an indication that still the stream is left, and we can see further up on the higher side has been considered. Now, as we have talked about the Nifty has been considered, 51,900 around has been trading, and the bank and the private sector banks are supporting it, and we can see further highs in the Bank Nifty has been considered. Immediately, if I talk about this, 51,950 is a resistance mark for Nifty has been considered, but the resistance would be overcome, and I am looking Bank Nifty at least to cross 52,500 to 52,600 band. Support wise, if I talk about, then 51,700 and 51,300 would be the immediate support has been considered. Ultimately, it can further move up, but right now we are heading for a smaller band like 52,700 around. If I talk about the Nifty, since Bank Nifty has been supported, and Nifty can further move up on the higher sides, so it can move up towards the level of 23,800 to 23,950. That would be the first hurdle zone, and if we are able to cross, then 24,200 would be the next hurdle. Regarding with the support has been considered, then 23,300 and 23,100 is a support zone for the Nifty.
Okay. So that's the story on the Nifty and the Bank Nifty, but a couple of stocks definitely in focus. And let me talk about the Vodafone Indus Tower pairing along with Bharti Airtel. All these three in focus. Vodafone now back up. Remember, Vodafone PLC, the parent company, has made it clear they're going to use all of these proceeds after selling about 18% stake in Indus Towers to repay their creditors. So Vodafone up on that. Indus Towers, expectedly, if a big stake has been sold, will be down. And remember, Bharti Airtel came in and said that they've increased their stake by about 1% or so. So Bharti Airtel down about 2% as well. So while those fundamentals play out, Brijesh, I was wondering how you see these three counters on the charts.
Now, if we go about all these three regarding with Idea, Indus Tower and Bharti, purely for the trading bet has been considered on the longer side. So I'll say that Vodafone definitely look promising. If we look the smaller time frame of the chart, it has formed the rounding bottom and it can further move up. And that bottoming was been in the range of 12 to 13.5, and as slowly is inching towards the resistance zone. So 16 was been acting as a resistance. Now it has been firmly crossed and it's been trading now 70 rupees 20 paisa. So till 16 doesn't break, I would be saying it is looking promising. That is one of the sign. Regarding suppose someone wants to play also, or suppose someone have it, then I'll say 16 keep it as a stop loss. 18 rupees would be the first hurdle, or I would be saying the 52-week high, that is 18 rupees 40 paisa, that would be the first hurdle band. And if we are able to cross this level, then the next level would be 20 rupees 20 paisa. So Vodafone definitely on a long side. Regarding with the Bharti has been considered, the Bharti on a shorter term time frame, which was been trading with high adoption, high bottom formation, but after making a high of 1,455, it has moved down down, and the strength is been getting weaker towards the long sides, and the moving down is with the increase in the volume. Shorter term time frame of moving average also indicates that till it doesn't give closing above 1,420 rupees, we can see a downside. Now the downside can be, the first level would be 1,380. If we are able to sustain that, well and very good. Otherwise it can further move down to 1,360. So I'm looking somewhere around 1,370 or 75 around. It should try to settle, until it is not able to cross at 1,425. The one can keep that thing as a stop loss, and any rise should be used for a sell purpose. Regarding with the Indus Tower is been considered, it is been in a range. It has to give closing above the level of 352. So till that 352 level is not been broken on the higher side, I think it would be in a range of 320 on a downside, followed by 350 on the higher side. So for the range has been considered, we all know, buy near the support, the lower band of the range, and sell near the higher level of the range.
Okay, so Indus Tower could hit that higher level of the range. What are your picks for today, Brijesh?
Okay, regarding my picks, so my first pick would be NBC. If we talk on a shorter term time frame of the chart, it has given the breakout, is trading near the previous week high, and with increase in volume. Right now it is quoting at 161. So one present rate can be used for a buy purpose, or any dip can be used to go long, with the stop loss of 152. Play for the target of 170, 172. And if we are able to surpass this level, then the next level would be 182. Time frame to hold would be 2 to 4 trading session. Second call would be Hudco. We have seen stock making the gap was formed, and it's been trading above the gap, and it has been runaway gap. And today we have seen stock touching the previous week high, and with the increase in volume. So it's indicating the next line of the momentum. We can see the previous swing higher, that was of 299, can be touched. So somewhere around 283 the stock has been quoting. One can go for a buy call on the present rate with a stop loss of 273. Play for the target of 299 to 300, and if we are giving closing above the 309, then the next level would be 320 rupees. Again, the time frame would be same 2 to 4 trading session.
All right. So, Hudco and NBCC in focus. Remember, both stocks have also had quite a bit of a run-up because of the government's announcement, the cabinet's announcement that it will build 3 crore homes under the Pradhan Mantri Awas Yojana. So both stocks have seen a fair bit of a run-up, but are up today as well. Now, meanwhile, a slew of block deals have taken place in trade today, and that's been one part of the market action. Anushi is joining us with the roundup of how they've all fared, how those counters have fared after those block deals have gone through. Yes, Anushi.
Hey Tamanna, so it has been a day of block deals today, a clutch of block deals in focus. I'll start off with the first, that is ZF Commercial first. Now over here 7.5% of equity changed hands today. Vakil Asia sold up to 7.5% stake to its institutional investors. Now this block sale was of up to 1.43 million shares worth around 2,142 crore worth of stake in the company. Do note that Vakil Asia is the promoter of the company, holding about 75% stake. The stock did see an intraday low of about 11%, but from there it has made quite a recovery. Now it is trading up to 5 to 6% below. Volumes, if we look at, traded at about 70 times its 30-day average. Next, moving on, we have Sansera Engineering. 10.7% equity changed hands in 5 large trades today. The deal size was up to 62.5 lakh shares of deal value, coming up to about 720 crore. In the selling shareholder side, we had client Ebin, which sold up to 9.38% of the stake, while Employ Ebin Limited sold up to 2.28% of stake. Again, high volumes on this counter, 4.2 times volumes compared to its 30-day average, and the stock did see an intraday high of about 8.6%. Moving on to the pharma space, Gland Pharma was in focus. 5.3% of equity changed hands in 3 bunches. Now here Fortune Pharma offered up to 8.2 million shares, selling up to 5% stake of its stake in the company. Now this was at a floor price of 1,750, which compared to yesterday's closing price was at a discount of up to 4.8%. Also note that Fortune Pharma held about 57.86% at the end of March 24. Lastly, we have Pyramid Enterprises, 4.8% equity changed hands here, and this was traded in a block. For more details, we'll wait for the evening on who on the buying side was. Pyramid Enterprises block trade happened at a price range of 900.8. So these were the major blocks that had taken place and the stocks that were in focus because of this.
All right, thank you for that, Anushri. We'll get a quick view from Brijesh on some of these counters, but and some of these stocks, all the block deal candidates. But after a very short break, we'll come right back with a lot more. Stay tuned.
Welcome back. This is India Market Close. Well, we are taking stock of what's happening in the banking space, and in fact, we've seen more gains coming in. It does seem like this expiry trade, which is playing out at the moment, but well, for now at least, the Bank Nifty is now below the mark of 51,800. Remember, we've seen a very, very sharp up move of late, and do remember that it's been quite a day for now. But to take us through the fundamentals as far as the banking space is concerned, as well as many other aspects in the market, well, let's get in Sudeep Bandyopadhyay of IndiTrade Capital, who's joining us at the moment as well. Sudeep, good afternoon. Thanks so much for joining in. Your view on banks, it's been quite a day. It's a new life high, but more legs to this rally, specifically with respect to the private sector banks?
Absolutely. I think, banks have not been moving for quite some time. The market has moved, but the banks were just there. And that was kind of dragging the overall market down. And it was high time that banks started moving. We have been advising our clients to get into large private banks. And our prediction was that this HDFC, Axis, ICICI, Kotak, IndusInd, these bunch of banks which have been doing very well financially. Their ratios have been good, and they deserve a better valuation considering what's happening in the market. Now, if you compare them with the PSU banks, I think PSU banks have moved up quite a bit, but private sector banks haven't moved to that extent. And the deposit mobilization, which is now critical for the banks because loan growth will be there in the economy. And the efficiency in deposit mobilization will determine the winners in the banking space. Under the circumstances, we definitely would like to bet on the private sector banks, large private sector banks in particular. HDFC has been our favorites and continues to remain our favorite.
Right. So banks looking like they are in a good space, but Sudeep, specifically on two, let's look at IndusInd and look at Muthoot. Both, have been seen coverage being initiated by Bernstein today, and are an interesting play on financials overall. So, just your take on both of them, Sudeep.
Well, IndusInd, if you look at it, they have a very interesting component. They have a very large microfinance business. They acquired the SKS microfinance, and that is now big. That has helped them expand quite a bit in rural and semi-urban areas. That has also helped and will continue to help them in deposit mobilization because they are reaching out to a vast section of population which are not reached out by other banks. So I have been positive on IndusInd. They had certain corporate challenges. I think that is a thing of the past. And I think this is one bank which will surprise us on the positive side. As far as Muthoot is concerned, again, there are components. One is, of course, the gold loan itself, business itself should do well. And considering the challenges which India in IIFL is facing on the regulatory side, and their gold loan business is not permitted at this stage, the gainers are definitely Muthoot and other gold loan players. So as far as gold loan concerned, they are at a positive position. They also have a microfinance business, and I talked about the microfinance piece doing well as the opportunity there which is in front of them. So considering these two aspects, I think both Muthoot and IndusInd does look good. But if I have to pick up a gold loan company with a microfinance angle to it, I think probably I'll go and pick up Manappuram because valuation-wise, Manappuram looking attractive vis-a-vis Muthoot.
Right. Brijesh, just want to come to you on a whole clutch of stocks and how you see them. We talked about some of those block deals. I would I would pick a ZF commercial for your view, Craftsman Automation if you track that. Any view on any of those counters?
Well, I don't track, but looking the chart pattern, I can update to you regarding with this Craftsman has been considering. See, the daily chart indicates it was in a range. The downside 4,110 or 20 around, and a higher side it was 4,540 around. That range has been broken and it's been moving with volume, but that is one part. Second part, with the day before yesterday also we have seen a volume breakout in it, and the longer term moving average has been broken and it's been trading above that. So till 4,500 or 4,400 doesn't break, I don't think so any negativity in it, and the stock can try to touch 5,400 to 5,500 mark in a couple of week time frame.
And what about the private bank stocks that we're talking about? Okay. Do you like HDFC, Axis, IndusInd? Actually, so much to choose from today.
Right. So I'll go with SDFC, and SDFC has significantly it was been laggard, and now it is been moving up significantly, and all these whether that be a shorter term time frame or a longer term time frame, and with the moving average, the stock has been trading above that, and it's trading at 1,660 mark. Stock till doesn't break the level of 1,570. I don't think any negativity in it, and in a couple of days we might see stock touching a level of 1,715 to 1,720, and if we are surpassing that level, then the next level on our resistance would be 1,820 to 1,840. So SDFC look promising. If I talk about the ICICI, it has we have seen ICICI also after consolidating in the range of 1,100, we have seen breaking out and moving on the higher side, and the next level would be 1,210 to 1,220 till it doesn't break 1,110 mark. One stock which is not in the private, but SBI is looking good on the chart, and 853 around the stock has been trading at previous week high and month it has been crossed. So the stock, till it trades above 820 marks, it is looking promising for the long side. It's been considered, and I'm looking stock at least touching 910, where we can see some profit booking.
Okay, gentlemen, stay with us. We move on and address the fertilizer space, because that's the one where we have seen significant gains today. Fertilizer is buzzing in trade on media reports of proposal to remove of GST implications on fertilizers. Meanwhile, Nuvama has put out a report with a bullish view on the space. My colleague Mihika joins us with more details. Mihika.
Yes, it's been a good day for fertilizer stocks, especially counters like Trumbull Fertilizers, Natural Fertilizers, as well as RCF. Now, Nuvama has come up with a report on these companies. It's maintained a buy rating for all the three companies, with a potential upside ranging from 32.3% to 58.7% from yesterday's closing. And the highest upside potential is for RCF with a target of 275 rupees, whereas Trumbull Fertilizers, the upside potential is at 32.3% at a target of 580 rupees, while for Natural Fertilizers it stands at 185 rupees with an upside potential of 53.4%. Now the bullish views, based on a technical perspective, they are seeing a bullish structural confirmation in the long-term charts. They are seeing the fertilizer stocks catching strong attention, and while the sector has shown a mixed performance in recent years, currently it's showing the first signs of leadership when it comes to in the high beta sector. So the overall theme looks positive, and it suggests major uptrends to unfold in the coming years. The second news flow is based on media reports as well as an Informist piece that have suggested a removal or a possible reduction of GST on fertilizers. Now, the first Modi 3.0 GST Council meeting is set to be on June 22nd, which is Saturday. And media reports have been suggesting a proposal has been floated to remove the GST implications on fertilizers. That the Fitment Committee has referred to the government of ministers for rate rationalization, and the committee believes that the exemption will lead to duty inversion in the companies.
All right. So, just Agam, interestingly, on the whole fertilizer play and the GST bit, you've seen a whole set of stocks react today.
Yep.
Fertilizers are one of them. You've seen, just pull up Nazara and see what's happening to Nazara as well, because this is the first GST Council meeting on Saturday, in fact, which is going to take place after the new government has taken charge. Delta is the other stock that we should look at. Delta spiked up, Nazara a little down, but Delta looking very positive. And the hope is that the GST Council will pick up issues left off from the last meeting.
Right.
Now, those would include things like online gaming, those would include things like fertilizer stocks, lots of stories doing the rounds. What I would really recommend to our viewers is to wait and see.
Yeah.
I've already seen two versions of this fertilizer story in the span of the last few hours.
Yeah.
One saying that they will exempt GST on fertilizers for edibles or some important foods, basic foods, and then saying that no, if you do that, then the whole inverted duty structure gets mangled. So it will be wait and watch.
Right. But Tamanna, notwithstanding what could be expected from the budget, there is...
The GST meet. I'm talking about the GST meet.
Pardon me, the GST meet. There is now a little bit more of a belief that, at least as far as fertilizers are concerned, because that is also a very cyclical sector, well, it does seem like it's back in terms of the demand and supply scenario, besides the fact that we're expecting strong monsoons. And that's the reason why we have a handful of broking houses which have actually come out with notes which are positive on not just fertilizers but the entire agrochemical space at the moment. Of course, we still need to wait and watch with respect to what's happening with the GST, and of course down the line we will also keep an eye on the budget. But yeah, these are a handful of so there's ICICI Direct, there is also Nuvama, and there are a handful of others who are going to start coming up with more and more traction with respect to what we can expect from fertilizers and agrochem. It's just something to keep an eye on.
I suppose sugar also in that same category. Now, sugar, remember, started running up since the statement that ethanol blending will hit 20% by next year, which was already the move. Let me in fact ask Brijesh and Sudeep on their views. Sudeep, I'll come to you first on fertilizer stocks.
I think you guys have covered quite a bit, and I'm also equally confused. There are all kind of rumors regarding this particular GST issue on fertilizers, and all kind of stuff is being talked about: removal of GST, reduction of GST. It's actually a challenging thing to do something drastic on the GST front, because it will lead to a lot of confusion and a lot of issues overall. So let's see what happens at the GST meet. I'm not expecting something big. If at all, some reduction may come in, but that's about it. Removal, I think, is out of question. The second thing, which I think fertilizers demands some attention, definitely, because it was languishing and there was no attention to this segment of the stocks. The reality is that the monsoon is expected to be good. Fertilizer demand is expected to go up. And the valuation comfort was there as far as some of the fertilizer stocks. So under the circumstances, I think they deserved a better valuation. Also, the government is trying to do something on the fertilizer. That much is clear, because there are lots of points which are being talked about at different levels, and rationalization of the entire structure of fertilizer distribution, subsidy, direct benefit transfer. All that is being worked out, and I think it should change for the better, and things will start looking up even from here on for the fertilizer sector. So yes, from a long-term investor's point of view, some of these stocks are definitely worth buying. RCF, Chambal, NFL, all these are good buys if you have 1 year kind of time horizon in mind.
If we can very quickly pull up, a handful of these names which are doing well today and take it up with Brijesh, perhaps you can talk about Chambal Fertilizers, because that's the one which is very active in the futures and options space. It's up 7.5% near day's highs. And the other one is Coromandel International. That's the other one, again, from the agrochemical space, which is buzzing. Coromandel has given up a handful of its gains. It's still up as much as 3%, but we are still witnessing fresh longs here, at least as far as the respective futures go. Brijesh, what's your call here when it comes to Coromandel as well as something like a Chambal Fertilizers? What's the way forward?
If I talk about the fertilizer, what you've been talking about, the Chambal Fertilizer, whether that be RCF or whether that be NFL, all the three have today we have found the gap up opening, and today and a couple of days back we have seen a volume breakout also. Now regarding with the Chambal Fertilizer, it's been considered right now, and it's been trading at 470. The stock has been trading above 430 mark, which was the previous swing high. So if it doesn't break that 430, we can see further upside. Now that upside can be, the first hurdle would be immediately would be 490 to 95. If we are surpassing this level, then the next level would be 550 mark. So I think that if someone wants to play a long on Chambal Fertilizer, let the stock comes to around 460 and below that level, then one can take a long call net with a stop loss of 430 and play for the target of 490, 495 as a first, and followed by 550 mark. I think 550 can be seen if everything goes right on the from a government point of view. Then by a couple of week time frame, Chambal Fertilizer might trade at 550. RCF is being considered another stock which is looking promising till it doesn't break 172 mark. It's looking promising, and on the higher side it has a resistance to 108 to 210 odd level. If I talk about the Coromandel Fertilizer, the stock already had made the a curve pattern which gives a bullish sign. It has further moved up and it's been already extended. Next level on the higher side would be 1610, but if I talk about the downside, it can go further down to 1450 or 1420 mark. So as a risk reward ratio has been considered, Coromandel I would be saying to avoid. Chambal and RCF bet can be taken on the fertilizer counter.
All right, so that's the story on fertilizer, and maybe not the boom right now is because of budget, GST meet, what have you may, but the fact is that the banking stocks are in a frenzy of their own, and after a while. Some may say this was the long-awaited comeback of private banks in the Indian stock market. And look at the bank Nifty there is testament to what I'm talking about. To get a deeper perspective on this, I'm joined now by Gurmeet Chadda, Managing Partner and CIO at Complete Circle. Gurmeet, great to speak with you, and always a pleasure to have you back on NDTV Profit. Let's get straight to the point as far as the Bank Nifty is concerned, financials are concerned. For the longest time, the conversation has been that private banks will start running up once the FIIs return. Do you think that that's now a redundant story? That anyway, you are going to see even domestic inflows push up private banks?
Yeah, I think it will be both, Tamanna, both FIs and DIs supporting, because there's rotation you will see in the market, and the rotation is happening pretty fast. And if you see, for example, we saw corporate growth to GDP, corporate profit to GDP coming back to 5%. The biggest contributor is banks and financial services. In fact, if you see last 2 years EPS growth, it's again 25-26%, which is better than the Nifty 100. But because FIIs have been regular sellers, I think the performance of Bank Nifty has been relatively subdued until last few days, where now it's meaningfully crossing 50,000 levels. So I think a bit of value buying domestically, bit of FIIs coming back. I think it's a combination of two. And I think the earnings, I think, will also be very positive. The 10-year yields are lower. It's almost sub 7 now, close to 7. It was 7.15, 7.18 in March, April, if I remember correctly. I think a couple of PSU banks had to do some provisioning, especially Bank of Baroda, in terms of exposure to aviation and one international account. ICICI Bank, in fact, I was a little surprised. It's been consolidating at 1100 levels for almost 6 months now, despite very industry-leading operating metrics. In fact, the deposit growth was at par with HDFC, and the advances growth was actually better. So I think it's a bit of rotation and probably some value buying emerging with markets looking at touch expensive.
Good afternoon, Gurmeet. This is Agam here. Gurmeet, yesterday we were also talking about Hyundai's entry into Indian listed markets. Keeping that into consideration to a certain extent, of course, market participants believe that it will be listed at a tad bit of a premium as compared to Maruti Suzuki and, of course, Tata Motors. What's the sense here? How do things change for Maruti Suzuki and Tata Motors once this entity also comes through on the Indian bourses?
No, I really don't see anything changing much. I think we already have M&M Tata Motors listed, and they did well with Maruti having. I think it's got to do with operating performance, and Hyundai has done well. Also, I think I'm more interested in the auto value chain, especially the ICE ancillaries. It's like, the entire world was focused on clean energy, and then suddenly thermal and other sources of energy, became relevant because people realized that it's a long drawn, cycle, and it's not going to change immediately. And that's why you saw the re-rating in some of the PSU energy stocks. I think something similar will happen with auto ancillaries. I think Toyota has shown that maybe hybrid could be the future with the latest study they have done. And what has happened is last 3-4 years, there is no capex in forgings or fabrications or toolings, and Ukraine has had supply issues because of the war. China anyways has moved to EV because of Baidu, and also India remains the only place where you get this, IC auto ancillary parts. Valuations are reasonable. I think a lot of them are now operating at 80-90% capacity. So likes of, the Motherson Sumi, which is called in a different name right now, the Lumex, Uno Minda has already crossed 1,000. It has a nice mix of largely predominantly IC, but also EV portfolio. So you will see some of those, names coming back. And again, as I said, the market is rotating towards value. So whenever there is near-term visibility of earnings, valuations are a little reasonable, like banks, I think some of them will also come back.
Yeah, no, so auto angs also in focus, definitely. But Gurmeet, if I can just follow up on, the banking space, the whole private versus public bank story. Do you think that tilt, that axis is now shifting, considering that private banks have underperformed in relative terms?
No, if you see ICICI Axis or a Federal, it's not really underperformed. It's just that PSUs were so cheap, available at 0.5 book value, 0.4 book value. And the market realized that some of the changes are structural, especially, so if you see there were 4 PSU banks, Tamanna, which reported 1% ROA. And this is other than SBI. Now, I have not seen, PSU banks report quarter on quarter 1% ROA. Yes, we can debate that some of it is assisted by treasury gains, etc. But, if you see monitor the credit cost, monitor the slippages. If you go to SMA1 and SMA2 book, which is the stress in the books, it tells you that, IBC, which is the bankruptcy reforms, have had some impact on PSUs. So that was more a bit of a re-rating. I think from now probably it will be more balanced. So probably our picks are maybe SBI and Bank of Baroda on the PSU front. Bank of Baroda in particular. I think they've already done a provisioning of 550 crores in last quarter, and I think you will see and obviously they had the exposure to the aviation name without getting into the specifics that led to a slight underperformance. So I think that's positioned well, and you have HDFC Kotak and all. I think will probably make a bit of a comeback. Market would want to see HDFC results. It has a large, and that's why the stock is up today. Is the NIM pressure behind? How successful the bank has been to replace high-cost deposits of HDFC with CASA, and can they still maintain that 15% advance growth with the size of the balance sheet they have? So I think those are the things.
Yeah. No, just on HDFC Bank, I know Gurmeet that you've been bullish on HDFC Bank. This well-sized holding that you have also, firm has in HDFC Bank. Just want to understand from a slightly longer perspective. Do you think that the merger troubles are now on the back burner as far as HDFC Bank is concerned? At this point, at these levels, do you see it well placed?
I would not say they are completely at the back burner because there is a genuine, war going on for CASA and deposits across banks. And I think it's not over. But what you will see is the incremental pressure, which we saw in the liquidity ratios, the cash deposit ratios will keep coming off. I think the NIMs probably have bottomed out in my view. I think that's what market would take solace from. And I think they are garnering almost 23-24% market share of incremental deposit. But it's not easy to replace, let's say, a 5 lakh crore high-cost deposit book immediately with CASA. So it will take time. I think what the street want is, HDFC has done a lot of OPEX. They've been launching like 1,000 branches they did last year. Year back they did 700. How much of that OPEX will now translate into, if I can call loosely that, that operating leverage? Because the branch takes about 2-3 years to age. I think that's the metric you have to track. There are now 8,500 branches, more than 2,000 locations. Now, if the aging happens right, I think it will start getting reflected in the core metrics. And that's what I think the market would want to see.
Gurmeet, also when it comes to NBFCs, you have housing finance once again the fore. In the public sector space, of course, there's HUDCO, but even Bajaj Finance will be listing its housing finance unit later on. Your view here on this particular sub-segment?
I think they're adding now. I think Poonawalla, because of the block which I think happened at almost 76 lakh shares, there's a bit of a pressure. It's down from 500 levels to 425. Bajaj Finance, the peak was probably 8,500. I think the better NBFCs will make a bit of a comeback again as cost of funds comes down. Now you have to monitor the 10-year yields here, and suddenly you'll have one quarter where suddenly the net interest margins will surprise because the credit growth wise, and Bajaj is still growing 28%. Poonawalla obviously is doing 35-40%. Now you have Arvind Kapil there adding there, and there's some niche NBFCs we like Ugro, which is very focused on SME space lending, and they typically operate in that 14 to 18% yield, kind of a secured lending to keep the credit cost. They've just done a fundraise of almost 1,000 crores, so pretty well capitalized now. So, and as I said last week when we discussed, I told you housing finance. That's largely because of the upcoming budget. Market is expecting more sops on housing. So we like Awas, we like PNB housing in that space.
Yeah, what about the insurance players? Gurmeet, are you finding any of them interesting? After the surrender value pain has lifted, at least for the life insurance companies, they have been sort of sitting this one out. If I look at the entire BFSI pack, do you see any potentials there?
Not really. You can do limited names in financials. We are more keen on capital market plays. I think the SEBI action should come on derivatives. That may give a bit of a correction in exchanges or depositories or some of the broking names which we like. I think we would like to monitor that space and buy on dips. One space I like related to insurance is Policybazaar, which is PB Fintech. I think it's a market aggregator. And what happens in these businesses that once you become break-even, the growth in profits is geometric because the cost doesn't go up. And I think PB Fintech is demonstrating that for the last 2 quarters. Now, again, there was a bit of a concern with promoter offloading some shares. So I think if they can demonstrate, like Zomato, 1 or 2 quarters of consistent growth in profitability, I think the stock has a chance to see some more re-rating of these levels.
All right. Thank you so much for that. Always great speaking with you. Gurmeet Chadda there on all things financials and talking about Policybazaar, among other things. Just in that space, not in financials, but I would say in your app-based space, Zomato is another one which is in focus today. There's a UBS note out which is quite positive on Zomato, and of course that trigger being that they have confirmed their conversations with Paytm specifically on acquiring their ticketing business. Only at the conversation state right now, not gone beyond that. But I was wondering, Sudeep, if you had a take on Zomato, already run up because of the Blinkit story, but the fact that they want to get into more and more verticals of this sort will be taking on the likes of a Book My Show if they do go into the ticketing space. Do you see that as an upside for Zomato?
Absolutely. I think this is one space where there is very little competition. You mentioned Book My Show as a kind of a monopoly there as far as cinema ticket booking is concerned. So a bit of competition, bit of aggression from Zomato should be good for the industry, this specific space. And as far as Zomato is concerned, this is an allied field, and I think the deal at whatever price is being talked about still looks good from both Paytm's point of view as well as Zomato's point of view. So, I hope the deal happens because this will be good for Zomato. Since you're talking about this app-based companies and all, I would like to put delivery in the fray. I think this is one company which has disappointed the investors for quite some time. The results haven't been up to the mark. The performance haven't really come. But this is one space where I think there is enough and more opportunity. And if they just get their operational metrics right, I think there is a significant upside scope for delivery from here on.
All right, and since we were talking about Zomato, what's really happening with that specific stock is that it's once again moving up as much as 5%. It's a relatively quiet mover, but it's advancing all the same. And it does seem like it's not too far away from its life highs of about 210 odd levels. Brijesh, if you can come in on Zomato as well, what's your view here and what would you do with this?
So I would be saying, suppose someone has it, hold on, nothing wrong in it till stock doesn't break or give closing below 185. Suppose someone wants to buy at current level, I would be saying buy at current level or any dip till the level of 195, one can take a buy call. That is one point. Stock has a 52-week high of 207. I think that would be easily would be crossing, which, since the pattern and the volume indicates that the next level hurdle would be 210, 212. And if we are sustaining above that, then the next level would be 235 to 240. So the first level to watch would be 210. Followed by 235 to 240, but the condition is it should not give closing below 185. So it's look promising. I think 185 would be good, would be held, and 210 can be achieved in 3 to 4 trading session.
Right. So that's the story on Zomato. Another space which has really been very sweet for investors. Please pardon the afternoon pun. Has been sugar stocks, but Mahima is joining us for more on this. Mahima, any particular reason why sugar stocks are running up? Once again, we already had the initial reaction to the ethanol targets by 2025, etc. But what's happening today?
Right, Tamanna. So the possible reason for sugar stocks buzzing today could be, the NCP leader Sharad Pawar on Tuesday has written to Prime Minister Narendra Modi saying that, there should be a lift on ban of sugar exports and that relaxation on limits of ethanol blending should take place. He said that the central government has taken many decisions against farmers. He's saying that if the ban on exports gets lifted up, the farmers will get a better price for their sugar. And he's saying on one hand, the central government is ensuring that farmers get lower prices, while on the other hand, input costs of agriculture have increased. So from both the sides of supply chain, farmers are taking a hit. And because of this, a lot of sugar stocks have been buzzing in trade today. Like EID Parry did touch an intraday high of 9.7%. Triveni Engineering touched an intraday high of 11%. Sri Renuka Sugar touched an intraday high of 9%. And all of these sugar stocks combined, EID Parry, Renuka, Triveni Engineering, Dalmia Bharat, Balrampur Chini Mills, have seen a run up anywhere between 12% to 25% in the past 1 month. Now, in terms of valuations, EID Parry has the least valuation of 15.8 times PE. Stocks like Triveni Engineering and Balrampur Chini have PE of 19 and 16 respectively, and Dalmia Bharat is a bit expensive stock in the sugar space. which has a PE of 42 times. So, this could be a possible reason as to why the sugar stocks are buzzing in trade today.
All right, Mahima, thank you so much for getting us all those updates when it comes to the sugar sector. Sudeep, let me take this one up with you. The expectation is that in the next sugar year, production is expected to drop by around 10%. Under those circumstances, there are requests to the government of allowing exports. Of course, if we do allow exports, that will mean even lower supply in the domestic markets, and on the back of that, we could potentially see higher prices for sugar, even higher prices for sugar. What's your take on this, and how does that play out going forward, Sudeep?
I think it's a very tricky situation. And the current demand for export is on the back of the fact that there were massive floods in Brazil, and a lot of crop damage has happened there. So international sugar prices are hardening and expected to harden even further. So I think the request for allowing export is on the back of that. Ethanol blending limit relaxation is also on the back of that. So I think it's a very volatile situation. Government will have to keep in mind the inflation and consequences of that. And because if the sugar prices are allowed to go up based on shortage of supply, I think that will be not good for Indian economy. But I think somewhere it has to strike a balance between the realization of the farmers as well as the requirement of keeping the sugar prices under control. So that balancing act has to be done carefully by the government. Fundamentally, I think, if from a long-term point of view, we like the sugar stocks. The ethanol blending limit increase has been a structural change for the industry, and that's going to help the industry in the long term. Shortages and crop shortages here and there, floods here and there are temporary events which lead to spurt in demand and prices in the global markets. But structural change is the ethanol blending piece, and we have to keep that in mind, and that will help the sugar industry in India.
Brijesh, if I were to ask you about a Shri Renuka and EID, Parry and all of that, how would you look at those?
Triveni, EID Parry and Renuka, if I consider all the three, then EID Parry and Renuka look promising. EID Parry, if I talk about a nice volume breakout has been seen if I consider all the three. Stock today had bullish candlestick formation already been there and is trading near the day high. 775 would be the level to watch. If it's hold on this level, then the next level to watch on the higher side would be 890 followed by 940 mark. Still steam is been left in EID Parry. If I talk about Renuka Sugar, then 51 rupees 30 paisa it has been quoting. So till stock doesn't breaks 48 level, the next level on the higher side would be 56 marks. 56 is a tough resistance. We can see if it give closing above 56, then we can see a change reversal, and then stock can jump towards the level of 65 to 68. So immediately 56 would be the level to watch with the support or a stop loss of 48 rupees. And Triveni, if I consider, then the Triveni has been trading above the previous week high, and it has a support at 395, resistance line at 450 to 455. But as I said, if I consider all the three, then EID Parry's chart is much more promising as compared to all the three been there.
All right. So sugar stocks in focus. I think defense also very quickly I want to run through, because you're seeing profit booking in defense stocks today, whether it's a Mazagon, Cochin, Bharat Dynamic, all of them, HAL, they're on the screen also seeing profit booking. But before we get views on that, here's a bullish comment coming in from Adani Group Chairman Gautam Adani, where he says that the Indian stock market capitalization can exceed $40 trillion by 2050, as the country is on the brink of an unprecedented economic boom. Listen in.
I anticipate that within the next decade, India will start adding $1 trillion to its GDP every 12 to 18 months. This will put us well on track to be a $30 trillion economy by 2050. At this time, I expect the stock market capitalizations to have exceeded $40 trillion. What this effectively means is that over the next 26 years, India will potentially add $36 trillion to its stock market capitalizations.
Okay, there you have it. That's Gautam Adani telling us about what the stock market can look like in the future. But we are about 3.5 minutes away from close at the moment. Brijesh, your calls when it comes to BTST.
So if I go with the BTST, there are two calls. Number one, I'll go with the Adani port. 1447 I have taken out. Now it's been quoting at 1449 or 1450. 1420 would be the stop loss. Play for the target of 1485 to 1490. And another call would be a Federal Bank. We have seen in shorter term time frame of a chart and last 15 minutes to 30 minutes stock has been inching towards the higher side. 175 rupees 30 paisa 50 paisa has been quoting. 172 rupees 50 paisa one can keep as a stop loss. Play for the target of 180 181.
Okay, well, they have it. Of course, we also need to address what's happening in the defense very quickly. Sudeep, it does seem like they're taking a step back. A whole host of these companies from the defense sector, and I reckon that even after today's decline, they still remain pretty richly valued. Of course, they do have a very long visibility with respect to their order books, but how do you assess this specific sector?
Well, I think you're absolutely right. They are richly valued. Of course, they have a strong order book. They're doing well. And defense make in India is real. So under these circumstances, if somebody is taking a very long-term view, this is absolutely fine. But if somebody is planning to enter for a short to medium term, I think one should be careful. What is happening today is profit booking, definitely. And that's par for the course. But otherwise, also defense stocks, by and large, are richly valued. One area which I like in defense, even now, even valuation-wise, is the defense electronic piece. And that's why BEL, even today, is our favorite. And for an investor with 1 year plus time horizon, BEL is buying BEL still makes sense. Remember this, their application goes into Army, Navy, Air Force, everywhere. So under these circumstances, it is excellent pick even at current level.
Absolutely. In fact, Paras Defense still up today, of course, off its day's highs, but Paras Defense still in the green when everything else is seeing a sell-off. Thank you so much, Brijesh and Sudeep, for joining us today. And let's turn our attention as we wrap up. The market's just about a minute odd left, and I'm going to start straight with a heat map to give you a sense of where we're closing. Nifty in the red, so not quite sustaining above the 23,600 levels that we saw. You have profit booking coming in, and the last 20 minutes or so saw that profit booking deepening. Even though you're seeing banks right on top, the bank Nifty has slid about 500 points since its highest point of the day. Nevertheless, the fact that the Nifty is flat is also courtesy of an HDFC bank. I just want to pull in top contributors of the Nifty on that point and give you a sense of where really the pressure has come from. And Agam is clearly an RIL and an L&T on that side, which has pulled the markets down towards the end, even though an HDFC bank has been holding on.
Yeah. You know what, Tamanna, I wouldn't exactly call this a great closing because of the fact that firstly we're closing the red, but even the Bank Nifty's come off by quite a bit. And I reckon the last 1 hour action where we saw the Bank Nifty move all the way to 52,000 was most likely an expiry move and nothing else, because that's been sold into at the moment. As you can see, look at this. We've seen substantial amount of selling there as far as that this intraday graph goes. We were nearly at 52,000, and of course we've seen that correction come through. And of course, the market red doesn't look very, encouraging either. In fact, if you look at that, through the course of the day, we've had more declines as compared to advances. Even the broader markets, let's pull that up, because broader markets have, in fact, underperformed the benchmark. So the mid-cap 100 is down 1%. The small-cap index, the small-cap 250, is also under a tad bit of pressure right now. And, overall, even in terms of your key gainers and losers, as far as your broader markets are concerned, the momentum on the downside is a lot more as compared to some of these advances.
I would reckon some of that is because of the block deals, because if you look at it on that side, the ZF commercial is block deal kind of impact. But what you're also seeing is real estate taking a bit of a knock, real estate defense. So you're seeing sell-offs here in sectors which have been doing very well the last few days. So 6% down on a Soba, Phoenix Mill there, Mazagon. all of them that are pointing to that kind of a pain. But it's all about sugar and fertilizers on this side, isn't it? From a Chambal to an RCF, EID Parry, Shri Renuka, it's all about the sugar stocks today, and one outlier, a Delta Corp, on hopes of, I'm not sure what happening in the GST Council meeting.
Yeah, of course, the Delta Corp is a very interesting one, specifically when it comes to gaming, and of course, along with that, Nazara, but Nazara hasn't moved that much. Well, all in all, I'm sure we've had plenty of action as far as today's day of trade is concerned. But, well, given the fact that we're closing well off day's highs, that would perhaps leave some bulls concerned and perhaps some encouragement for bears going into trade tomorrow. You're going to have to wait and watch about how things pan out tomorrow.
Absolutely. So don't forget to come back for India Market Open tomorrow morning. But for now, from Agam, me and the entire team that put the show together, thank you so much for watching. Stay tuned. A lot more on the other side on NDTV Profit.